Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So this week was on the sign of the strong rally on the interest rates. So it was a light shock for market society. So when the interest rates have reached 1.6, the 10-year yield in the United States Treasuries has briefly touched the dividend yield of the S&P index, and that is a warning sign for stock market, first of all, but in general it was really bad surprise for a gold market and actually for other markets as well. So you can see what has happened on the euro currency, on the Great British pound. In general, everything stands and goes in the direction that we described already. So if you remember, our long-term view suggests a major reversal in the market, but maybe this point will happen a bit earlier than we thought, and we should not be confused and be surprised with these pullbacks on the market strength in the United States dollar, just because market is preparing to reverse, and when it comes closer to reversal point, these type of the collapses and pullbacks will happen often and oftener, just because market is preparing the background for that. So new factors already stands in place, starts to work, but it's not strong enough to trigger reversal immediately, because previous momentum stands very strong and market needs time to just take the new way and fade out the momentum that exists. That's why there is no confrontation between the targets that we have here by far, that stands above the market, with the recent sell-off. So it doesn't mean that we should abandon this target and say that immediately market will go down and everything is turning down. So it's not. Due to the momentum, this market still could reach the important targets above the previous top, as well as on the dollar index we have targets, below the market. So they could be reached still, and the major reversals don't happen here. So that's why on the euro currency, we keep a close eye, particularly on the recent lows of 1950. This is a crucial area for the short-term bullish setup. And to complete it, market has to stay inside of this swing. So we have this pattern, actually the reason why we keep an eye on that. Because while market stands inside of this most recent swing, the butterfly stays possible. And in this case, market could reach the 124.50 area, 60 area. That could also lead euro to complete the major XOP target on the weekly chart. In general speaking, if you'll take a look at the weekly chart, you'll see that this type of action that we have is very similar to this one. It's very choppy, tight standing candles on the weekly chart with a very small degree of the retracements, just smaller than the 30% retracement. Market stands strongly above previous top, so this is not the way how market reverses. This mostly meant some consolidation before upward continuation or something of that sort, building on an energy. Because reversal stands usually fast and market shows significant drop. So that's why it's also a reason why we think that maybe it's not over yet, as we could see the further upward action here on the euro currency within the month probably. So, but we have to be careful because everything stands in strong dependence from these lows. Market has to stay above it. Recent sell-off that we discussed on Friday, actually, we talked about this pullback that has to happen, but it happened a bit faster on the background of the interest rates, and market actually has hit the level that we specified as 120.60 significantly faster. Just within the one session, market has dropped to the downside. And this is actually not a good sign for the bullish context. But currently, if you'll take a look at the interest rates, you will see that they have dropped back approximately 7-8%, and interest rates right now returns back from the 1.6 to 1.42, even below 1.42. This is significant retracement, significant pullback, and well, it could return everything back to its own and euro could turn up again on this background. So as the collapse was strong based on the rally on interest rates, as return also could start because interest rates already normalized and returned back below the 142 area. So despite this recent sell-off, it doesn't mean that here market can't turn up again. So on the daily chart in particular, what we are looking for is possible grabber that we could get on Monday. As you can see, market is flirting with the MACD line, and the appearing of the grabber on Mondays could become a good sign for the bulls and could become the significant important part of the context where we could think about taking the long position. Besides, as you can see on the fall time frame chart, the market stands at the support that we described, 120.62, 618 level, and to form the butterfly is preferably to see that price stands above it. Of course, we have some room till the lows, where the overall bullish context will be valid, but for a bullish context, it is preferable to see the market stands at the major support. Let me just provide some confidence in the overall situation. The negative sign is that we haven't got any hand and shoulders that we discussed, because that could give us more gradual action with some kind of the ABCD pattern right back down, and market actually has broken the confidence here without any response. So here was some minor pullback up from the confidence, but with the whole downside action, it's mostly invisible. So it's just straightforward action through the confidence right to the 618 support. That's why, despite that market stands at the support, we do not intend to take the position immediately. We need to keep watching what will happen, because overall sell-off was strong, and we need to see whether we'll get the grabber. We need to see whether patterns will be formed here around the support area. Currently would not have anything. So it needs a few days probably to understand what's going on and whether the market will show some signs of a reversal around this level. But in general, we have currently the bullish view, and we'll be watching for bullish context, bullish patterns around it. One thing that you could consider, for example, in the beginning of the week is that maybe some patterns will be formed based on this thrust. So take a look, actually we have here thrust that's suitable for June-Napoli pattern. So here it could be scalp burned by the sell, for instance. The market will show the pullback. This will be burned by the sell. This could be opportunity for a scalp trade, the pullback. Or, for instance, it could be double repo buy. So double repo buy we could build in our context, since we're searching for a bullish reversal pattern around the support. But, well, we will see. There's two patterns that we could consider in the beginning of the week. But in general, for the Monday, Tuesday, probably we need to just wait what will happen. Whether the market will be able to hold around the support, or whether we'll get the grabber, and whether the market indeed will start the upward continuation. So that's the things that we intend to consider. If everything will be good, we just follow with this pattern and with aiming to 2460 area. So that's our view on euro currency.